Hello, everyone. Thank you so much for joining me on yet another episode of Talk with Gina. You know, I'm always excited to see all of you every single week. You know, this show is about wellness, learn, uplift, and inspire. And I do my best every single week to bring some great guests on that we can all learn from. Today, I have a guru, a financial guru, none other than Gillian K. Mullings. She is also author of Retire Like a Boss, Winning Retirement Strategies for Entrepreneurs, Freelancers, and You. She also has an ebook. It's called 10 Steps to Starting Your Biz in New York. Listen here, I'm going to bring Jillian on right now. I can't wait. We have a lot to talk to her about. Jillian.
Hello, how are you, Gina?
I'm great, thank you. How are you?
I'm fantastic. I'm happy to be here talking with you finally.
Oh, I know. It was a long time coming, but we finally got it all together, right?
The stars aligned.
So as I told everyone, you are a guru, and we're going to have a really great conversation. But you know, the wellness is in the journey. So I want you to just share with us just a little bit of who you are and how you came to do the profession that you're in right now. And we're also going to get to the point that you work for yourself. So you are a woman-owned business entrepreneur just doing it. So talk to us,
Exactly.
Jillian. Talk to us.
Well, it's kind of funny every time I think about me being in the business I'm in now. If you had asked me when I was 20 years old, I would have said no way. It would have been the most boring, uninteresting thing. I never cared about it. And later, about 15 years ago, I got into the insurance industry. And then once I understood how impactful, how important, how simple it is, and how it makes such a big difference in people's lives, I started to fall in love with this whole idea. And then I got into the retirement planning side. But to connect a personal story, the impact of it was an example right in my own family with my grandparents.
Mm-hmm.
They're both gone now, but before that, my grandmother had a stroke and she lived with a stroke for many years.
Mm.
We have a big supportive family, so we kind of everybody championed and kind of supported. But then my
Right.
grandfather got Alzheimer's and he
Mm.
escalated really quickly. And the impact for our family, we all pitched in, it helps. But what we didn't understand was we thought they would be okay because my grandfather had a pension, he had Social Security, he had some savings, he had 2 properties, like, oh, it's going to be fine. He's going
Right.
to be covered. We had no idea how the cost of that kind of care would just drain their savings,
Wow.
how the financial impact after a while. There's only so much a supportive family can do. And it was years later when I got into the business, I was like, oh my God, I wish my family knew these things that I tell people about now. I wish we knew it back then.
Mm-hmm.
You
So
know,
you knew when you were going to school that this is something that you wanted to do,
I did
or
not.
did you started doing something else? What were you doing before? What did you think that your profession would be?
Well, so I was in sort of like the construction space, real estate development. I was an
Mm-hmm.
administrative person. And I also was one of the people who would, like, as the contractors did their jobs, I would release
Mm-hmm.
their payments. So I would be checking, the development of the houses. Is the trim done? Is the painting done? Did you do the landscaping the way the customer ordered? And release their payments
Mm-hmm.
periodically based on when they finished the project. So I was doing that kind of work. Then I got into mortgages, and then the mortgage industry crashed. And then I got into insurance.
Mm. And so when you transitioned into insurance, someone told you about it, or you just felt that it
No,
was a safer bet?
I was just like looking for new careers, and I kind of examined different things that I wanted to do.
Mm-hmm.
And I started learning about insurance, just regular property, homeowners, car, that kind of thing. I was like, I
Right.
think this is something I would find interesting. And I did well. Started out basically right away, and stayed in that industry for several years and decided to say, okay, let me go into the other side of the industry where I'm
Mhm.
about people's finances and helping them to plan for retirement, which I
Mm.
even more in
Wow.
love with. Yeah.
So once you went into insurance, how long did you work for someone before you branched out and started working for yourself?
So that was about 6 years because I started in insurance in 2009, and
Mhm.
2015, I decided to become a retirement planning agent, life insurance, annuities, that kind of thing.
Wow.
Yeah.
That's cool. So was it a scary transition for you to branch out on your own? Did you have like a little nest egg that you were like, well, listen, if it doesn't work, I'll be okay?
I kind of dived right in with both feet. Like I'm
Mm.
that kind of person. Once I make up my mind to do something and I mapped it out and
Uh-huh.
understood, kind of, well, I thought I understood what I was getting into.
Right.
No matter how well you understand a topic or an area of
Mm-hmm.
expertise, becoming self-employed, there's a whole other learning curve on top of everything you already knew. Um, but here I am.
Mm-hmm. Mm-hmm.
Here I am. And it hasn't been, I haven't regretted a single moment of it. I love what I do. I love the way that
Right.
I'm able to help people and impact their lives. So, yeah.
Well, that's a nice segue though, because part of what you do is like teaching people, like you said, 10 steps to starting your business in New York. And I
Yeah.
know one of the steps is searching the market. Is there a market for
Doing
what
the
it is
market
that you want to
research.
do?
Yeah.
So when you created that ebook, you literally take the formula that you used when you started your own business to help others?
Yeah, basically. And
Mhm.
market research it's right up there in the top three because you have to know what you're getting into, not just because you love it, but who
Right.
is looking for that service,
Right.
right? Who actually wants that? Who actually is ready to spend money on what you're trying to do? Because you don't want to get stuck doing something that turns out to be a hobby as opposed
Mhm.
to an in-demand kind of service.
Right.
Right. So you follow the procedures, you take your time. You don't have to be in, especially if you already have a day job, you don't need to
Mhm.
run out and quit your day job. Take your time, do your research, um, learn about the industry. And Google is free, guys. Google is free. It has so much information about almost any kind of business. You can get at least some preliminary understanding of what the market is for that.
Wow.
Yeah.
Listen, listen, Miss Jillian is a guru.
I, I don't use
She
I
is
don't
a
like that
guru.
term. I
She,
don't
she
like
shies away from certain words, to describe her, but herself, but she is really and truly a guru. And I really implore all of you to take notes, but at the same time, I don't want you to take notes because I don't want you to miss anything. When you're starting a business. So let's
Yeah,
talk a little bit about that when you're starting a business.
right.
And you have to get your name. So, there are different search engines, the GoDaddy, and
Yeah.
so forth. So can you just kind of like sum it up really quickly? When you're starting a business, what are maybe the top three, top four takeaways that you really need to make sure that you do? We talked about the market research. Mm-hmm.
Okay, so we have market research. Another thing you want to do when you're starting a business is you want to find out what your state requirements are for starting a business,
Mm-hmm.
right? If you need to get licensing, I know there's a lot of hairdressers, nail techs, people who are doing eyelashes now, barbers, something else. Somebody might
Right.
be an interior decorator. Find out if your state requires a licensing for those types of things. Find out
Mm-hmm.
if they require you to have like a certificate that you've completed a course. Find out those requirements. New York State has, I was impressed when I was researching the details of how to go about setting up a business because New York State has a lot of resources. The website is super easy to use, and you can find some great information there. So market
Mm-hmm.
research, check your state requirements. And then the other thing I would say is kind of get a sense of what the startup costs are going to be for that business if you were to throw some
Mm.
money at it, right? And estimate like how many months reserve do you have to start out with, right? Because one thing that's very common, especially in our communities, a lot of people tend to bootstrap their business. Bootstrapping is a really great way of starting a business, especially if it's something you're already doing on the side and you want to go official, and then you just use your savings and you get started.
Right.
But you want to be realistic of, if I do this for real,
Right.
am I going to have to rent a place, or can I do it out of my living room or my basement, right? What kind of insurance will I need if I am going to start up a business? Because you have to protect yourself from liability, right? Insurance will protect you if you're making a skincare product in your kitchen, and it turns out that maybe you didn't fully disclose the ingredients and somebody had an allergic reaction, they could sue you, right? So you want to find out, what kind of insurance should I be getting for my business?
Right.
It's not to be overlooked at all. Don't take it for granted. Those are 3 important, simple things that you can do when you're starting a business, that you must look at when you're starting a business.
Very important, because it sounds great, but there's a lot of work that
There's
goes.
a lot of work.
There's a lot of work that goes into it. And then you also want to make sure that you don't get sued. I had a guest on, and she just named her business and was off to the races. And
Oh my
next
gosh.
thing you know, somebody knocked on her door and said, cease and desist.
Right.
This name is already trademarked. You cannot use it, and then start all over again. So that's another thing too. You have to make sure you trademark your name, right?
And do a trademark name search before.
Right.
Set up. Yeah, that's important. It's in the book.
Wow. Listen, I'm telling you, you guys better ask your questions of Jillian. Ask your questions. You can email Jillian at jillian@havenfs.us. Another segue for us, Jillian. So the name Haven Financial Solutions. How did you come up with that name?
So I'm in financial services, right? And there's all kinds of things when you're talking about financial services. People want to talk about investing. People want to talk about what you invest in: real estate, stocks, bonds, mutual funds, crypto, right? Some of these things, one of the recurring themes through financial services is talking about people's risk, their level of risk. And more people are taking on more risk than they realize. Especially if they don't understand what they're investing in. So Haven was to give people the sense that, we're talking about safety here. We want your money to grow, but we're never going to take any inordinate amount of risk where you have to worry about losing your hard-earned money. So it's a safe haven, safe place to put your money, a place where you can look towards the future and know that you're going to have financial growth and success.
So funding sources.
Yeah.
Do you have any suggestions for where folks can look to get funding for their businesses?
So there's one. So we talked about bootstrapping before, whatever you saved, maybe borrowing from friends and family, right? We talked about using crowdfunding, Indiegogo, Kickstarter, GoFundMe, believe it or not, is legitimately a crowdfunding for businesses.
Right.
And we also talked about grants. There's a list of different types of grants that people can apply for. And that does take a longer timeline, though. So it depends on where you are in your business. And of course, you can always take out a loan, right? If you are able to, maybe not a business loan because you're starting out, right? They don't give money to new businesses that haven't proven themselves, but maybe you could take out a personal loan. The absolute worst place, but you can do it, would be to take money out of your retirement savings to start a business. I mention it because a lot of people, that's usually the biggest pool of funds they have access to, and the first thing that they want to do. I would advise anybody who's thinking of that, don't. Because you don't know how long it's going to take you to be successful. And once you take that money out, it's really harder to put it back in than a lot of people think. So if you have any other means of finding additional funds, I would look at them and leave your retirement account as an absolute last
resort. Mm-hmm.
Yeah.
That makes sense, especially with the taxes and
The
different
taxes
tax
are going to hit
brackets
you,
and
ups and downs in the business. You don't know what
right.
your cash flow situation is going to be. Other situations happen in your life that you're like, oh man, I thought I was going to be able to pay this back by now.
Mm-hmm.
But then, you know what? My wife just had a car accident. And what are we going to do?
Right.
So things
What are
like
we
that.
gonna do?
Yeah.
Right, right. Well, we have some folks that are listen saying hello from all over. Memphis, Tennessee. We have CC. We have New Jersey. We Miss Ann, Diana in upstate New York. We have someone else, Wade in Atlanta. I mean, folks are in and they want to hear what it is that you have to say and learn.
Oh, that's
So,
wonderful.
an LLC versus INC. Why would somebody start? Would you start off as an LLC and then have to segue into an INC? So can you just kind of like give us the understanding of both?
So there is a lot of talk online about
Mm-hmm.
everybody needs to just set up an LLC. Anything you want to do, set up an LLC, right?
Mm-hmm.
I would advise you first
Mm-hmm.
and foremost talk to a tax advisor. Okay,
Mm-hmm.
not the person that does your tax returns on the corner somewhere. Go to an enrolled agent. No disrespect, but
Right.
they're looking for rebates and refunds for you.
Right.
They're not necessarily going to give you the best tax planning strategy for your business. So you want
Mm-hmm.
to, it matters, right? The things that are
Mm-hmm.
going to determine which way you go, your
Mm-hmm.
marital status. Are you married or single? What type of business are you doing, right? Um, what kind of product or services are you going to be offering? Um,
Mm-hmm.
will you need a brick and mortar business? Is this going to be a digital business? All of these things go into deciding what your tax structure of your business is. An
Okay.
LLC is not a tax structure. An LLC is like a formal entity to kind of
Mm-hmm.
separate yourself from your business. Again, legal liability. So if you are just starting out and you put your
Mm-hmm.
business in an LLC, if somebody has a claim against your business, it's against your business, not against your personal assets. When you
Mm-hmm.
file your taxes, if all you've done is an LLC, then you're going to be filing still as either married filing jointly or a single person or head of household. You are still paying personal taxes with the additional income from your business. If
Mm-hmm.
you set up as an S Corp or a C Corp, now it's a completely different tax entity from you personally. And then you can still have the LLC. Well, the LLC is, like I said, it's not a tax filing structure, but you still
Right.
have the protection from legal liability. That's all the LLC does, right?
Mm-hmm.
So as far as like what's the best thing, talk to your tax advisor. They're going
Mm-hmm.
to tell you, and it depends on how much money you think you're going to be generating right off
Right.
the right, because there's also a net profit threshold.
Mm-hmm.
Once you're making over 40,000 net, then they will recommend set up yourself as an S corp or a C corp. But definitely talk to your tax advisor.
Yeah, that's really great advice because you have folks who are into investing homes, and it's a lot of times it is advised to set up as an LLC, but then that falls under the S corp or C corp. I'm just saying,
Right.
you're the
It's
expert, but
not just the one thing.
right, it's not just the one. There's a little bit more to it, but there's
Right.
a reason for you to set it up that way as opposed to having it under your name, everything under your
You
name.
definitely don't want to be doing business under your
Mm-mm.
personal name at all.
No,
Yeah.
no, not at all. So let's kind of jump over a little bit to the retirement. What is some of the advice that you give to people regarding entire retirement?
Start saving. If you're not saving now, start. You're going to
Mm-hmm.
need more money than you think.
Mm-hmm.
So I have like three key takeaways, and I can just throw them in here now. Social Security, there's a big myth that it's going to be insolvent by 2033. That's false. Social Security is
Mm,
not going anywhere. Social Security is 100% funded by payroll taxes. So as long as there are W-2 workers, money is
right.
going into Social Security.
Okay.
Extra money from that is going into what's called a Social Security trust fund. So that's money over and above what people need to collect every month that they get paid.
Mm-hmm.
That is in danger of being insolvent. But Social Security itself is not going anywhere. So if you're working, making your FICA taxes are going in, and if you have the ability to save through your employer, do it. And if you don't, look for other means of saving for retirement. The next myth that I wanted to tackle is don't be afraid to look at your retirement savings. A lot of people feel like, oh, I should have more by now, or oh, I don't know what it's doing. They never look at their statement. Look at your statement. Look at
Mm-hmm.
it quarterly. Look at it monthly. Look at it even once a year would be good.
Right.
Don't be afraid. Look at it. And then when you do look at it, consider, what your living expenses are now. Are they going to be the same when you retire? Are you going to retire in the same state as where you live now? Or are you going to go
Mm-hmm.
somewhere where the cost of living is lower and maybe you pay less taxes, right?
Mm-hmm.
Look at those things. Don't be afraid to look at it. And what is the third thing? Putting your home. So planning for long-term care. We
Mm-hmm.
live in the state of New York. They have something called a 5-year look back. If somebody develops, like my grandparents, Alzheimer's,
Mm-hmm.
stroke, some other debilitating long-term thing that they're not likely to recover from, and your
Mm-hmm.
family now needs to get a home health aide to come in, mom and dad or grandma, grandpa, they don't have long-term care insurance. The state can, if they qualify, sorry, I just bumped my camera, the
That's
state
okay.
may find them eligible to receive care. However, if you own a home or any other significant assets, they're going to want to be reimbursed for that care. And if there is no planning done, they can put a lien against grandma and grandpa's home.
Mm-hmm.
When you're expecting, even if the house is paid off and you're thinking, oh my God, my granddaughter is going to have college fund, that's
Right.
gone. That's gone. So the importance of planning is super, super, I can't overstate it. If you own anything of value and you're getting older and knowing what your family history might be and you think this might be a concern, put your
Mm-hmm.
assets in a trust. There's a 5-year look back period that just went down to 3 years in the state of New
Oh,
York.
it did?
It did.
Okay. All
It did.
right. I've always knew it as 5. All right. Mm-hmm.
They just changed the law, so it's going
Wow.
no more than 3 years. So now it's an even greater incentive. If you haven't started planning yet, start planning now.
That's really good advice,
Yeah,
because if you need help with someone, let's say a home attendant to come in, the state doesn't do a look back. But that long-term care, they do that look back. They
they
do.
do that look back. Yeah.
So Craig is asking, which is best to save in when it comes to a retirement plan, Roth or traditional?
So it depends on a lot of things, right? A
Mm-hmm.
Roth has way more attractive tax benefits because the money grows tax deferred and it's
Mm-hmm.
accessible to you tax free after age 59 and a half and after you've had the account for 5 or more years, right?
Mm-hmm.
So it has really great tax benefits. If you have access to a traditional IRA,
Mm-hmm.
it might be through your employer, take it, right? Anybody can set up a Roth IRA. It's with after tax dollars. I tend to think it's better for more people, but it depends on everybody's situation, right?
Right.
So there, I don't like to talk in like cold hard either kind of
Right.
terms. It's usually a
Mm-hmm.
both and situation,
Mm-hmm.
right? So an interesting thing, whether you're doing a Roth IRA or a traditional IRA, it's the same annual limit. So it's not like you can do
Mm.
6,000 in this one and another 6,000, whatever the limit is this year. I didn't
Right.
refresh my memory. It's split across both.
Right.
So just keep that in mind.
It's great advice.
Hmm.
I want to go back to the trust.
Hmm.
And I want to talk about the fact that some people are unable to get help because too much money from their pension, too much money from their social security, and there is a way that they can get help if they were to put their monies in a trust.
Correct.
Keeping in mind you have to find a really great attorney to, to make sure it's all set up properly.
Right.
But in essence, there really isn't such a thing as you can't get help, so to speak. You know what I mean? Would you
Right.
agree? I mean, there are ways that you can
Absolutely.
do it, and it's all legal. You know what I mean?
Absolutely.
I mean, there was an article in the New York Times some years ago. I want to say it was as much as maybe 9 years ago. And the title of the article was pretending to be poor. And the article was really pinpointing folks who lived in these high end zip codes.
Very high end zip code.
Very high end zip codes, very high end. And so you may even have an opportunity to drive through that neighborhood and say, wow, look at these fabulous homes. Yes, the homes are fabulous, but guess what? While you're sitting there struggling and you feel like you cannot get any kind of help, they have help. They've even set themselves up for that look back. So when their family members, and it's not to say every last one of them, but quite a few of them, because it's been falsely said that black and browns dominate the welfare rolls.
Falsely.
Yes,
Falsely said.
falsely said.
Falsely
And
said.
so, if we could just touch on that, because I do know a few folks. I myself helped someone. She worked all her life, most of her life, and she really accumulated a sizable nest egg
Yeah.
that dwindled.
Mm-hmm.
2 years. And I'll give the number because this
Ooh.
old woman, she was just so upset. And I would talk to her, and $10,000 per month, this woman was paying out of her pocket
Yep.
for care. And it was getting to the point where she could see her money was dwindling. And she was so upset. When I would see her, she would cry. And I said, you know what? Ask your son to call me.
Yeah.
And he did. And you and I had a sidebar about that situation. So if you could just, speak to that in terms of how that happened.
Absolutely. So
Mhm.
it's related to the Medicaid look back that I was just talking about. The idea is you want to start the minute you get up to a certain age.
Mhm.
It's different for everyone because it's based on family history as well. But if
Right.
you think that this could be a problem in the future for you, and you know you have assets that you want to protect, don't
Right.
do it sooner rather than later. So the way the look back works is somebody might apply for Medicaid long-term care or Medicaid home care assistance,
Right.
Medicaid, and they're going to look at all your assets and they're going to say,
Mhm.
well, I see that 2 years ago, you gave your son $250,000
Mhm.
or whatever it was for. And they'll say, well, if you hadn't given your son $250,000, that could have paid for your care for 2 years. So you know what? When you either get the money back from him and let him pay, but you can't come back to us until 2 more years from now. And we'll look again. And if you're poor enough, then we'll provide the help to you.
Mhm.
Right? So you still have to keep paying it down out of your own pocket. On the other hand, if you do set up a trust, you get to a certain age and you know it's going to be a problem or you don't want it to be a problem, you create a
Mhm.
trust, you put your home in the trust, you put your retirement accounts in the trust, your bank accounts in the trust, anything else that you own of value, put
Mhm.
them in the trust. And now, the first time you go, they're going to look and see what assets are in your name personally. And they're
Mhm.
going to be blind to it because it's
Right.
in the trust. It acts like a shield, right? It's
Yes.
a shield while they can't see it, or if they see it, they can't see what's in it and they don't have any access or control over it. So
Right.
that's why a lot of people, you know, first time successful, first generation corporate, first generation doctors, lawyers, whatever. Well, lawyers might understand. But people who are first time, like making a certain level of success that
Right.
previous generations don't have the experience to fall back on. So they may not understand the importance of planning because, oh, I'm good. I got it like that. I can pay for anything I want. But they don't understand, like, the whole entire financial system, the whole world is looking at exactly the things that you don't think you need to protect.
Yes.
And the clock is just ticking for them, because the minute you become vulnerable and you need help, they're just looking at, well, I'm going to take from here and I'm going to take from there. And this one needs a little piece of this. So we're looking at hospitals, nursing homes, the IRS, anybody you owe money to, any other creditors, anybody that might sue you because you owe them something. They're in line first. They're in line first. And your family, your spouse, they get to the back of the line. They get to the back of the line. So that's how that works. And that's why planning is super important. But it's simple. It's easy. It doesn't have to be expensive. You know, here we are in the New York area, and a lot of homes are 500,000 and up, right? That's a kind of average price. And a lot of people think, oh, it's just my family home. It's not worth much. It's $500,000.
Yeah.
It's $500,000 that will be gone in the blink of an eye. 2 years, like your friend, right? 3 years. You'd be surprised how fast that money goes. So it's important to protect it. Even if you don't think you have a lot, you have more than you think you have. And it should be protected. And it's worth, you know, going to that lawyer and finding out the best way to do that for you and your family.
Very true. You know, truer words were never spoken. And the other thing that happens is there's a little bit of fear. And like I say, fear is false evidence appearing real. Oh, I don't have control over my money. You know, what is somebody going to do with my money? You know, if you need something, you know, let's say the threshold is $800. We would just throw that out there. And you cannot go above $800, even if it's $1, right? Because you'll be denied from the state. So you can't go even if it's $1. So your money is in the trust. If you need something, you just put the request in and you can get some money, but you just can't have it showing. Now, another question that came up. So the everything is in the trust.
Yeah.
And this is just to reiterate what you said. All of your assets are in the trust. Unfortunately, your loved one passes away. Can the state go in and take the money from the trust?
That's the whole point of a trust. They cannot touch it.
Just wanted to reiterate
that. Talking about, so there are revocable trusts and there are irrevocable trusts.
Okay.
If you have a revocable trust, meaning that you can change it after you set it up, that's not protected.
Right.
And they may be able to access that trust. It's still in your name. It's a part of your estate. So they can still penalize you. They can still access that trust. But if you have an irrevocable trust, when it's set up, you can't change it, right? That's it. So it's not in your name anymore. It's not under your control anymore. They can't get to it because it's not in your name. It's not a part of your estate, even though it might give you a check every month, pay your bills, and to go out and have fun and travel, right? It's not in your name. So that is a very key thing. And if you speak to an attorney, an estate planning attorney, not just any attorney, an estate planning attorney or an elder care attorney, they will be able to give you better advice on that. But the thing to do if you are afraid, obviously some of these topics sound intimidating, but they're really not. And if you are uncomfortable, you don't know what to ask, or it's too awkward for you, the way to beat fear is with knowledge and understanding. Find somebody you trust and ask them some questions. Start learning about it. Maybe it's not the right thing for you and your family, but how will you know if you don't ask?
That's so true.
Don't be afraid to ask.
Pride and ego tends to get in the way. Oh, I can do it. It does, I'm okay. And the next thing you know, there isn't any money.
There isn't any money, and by the time you figure it out, if you try to do it on your own,
Mm-hmm.
it really goes faster than people realize. It really goes. The money just disappears.
Oh.
If we have time, I could tell you a story, but please don't underestimate, like, the rules when you retire, when you stop working, the way
Mm-hmm.
money works, the whole 50 years of your life, working life,
Right.
everything you've known about accumulating wealth, when you stop working and you're 65, 67, 70 years old, everything to do with your money goes like this, completely upside down. And
Wow.
it's draining at a rate that's much faster than you thought, and being affected by things that you never thought would happen to you, would never affect you in your lifetime. And people will go broke in retirement. Look at the next time you go to your local big box store, look at
Mm-hmm.
how many, your local supermarket, look at how many
Mm-hmm.
people who are retirement age who are back in the workforce.
Wow.
Look at that. Pay attention. Pay attention. They're not there by choice. They're there because they have to be.
That's a good point. I mean, even if we look at some of these old school groups and we say, wow, so and so is in concert. Wow, I can't wait to see. Some of they tired. A lot of them are tired. No, seriously, not tired in terms of their performance, but tired. They've been doing this for years and years
So
and years
long.
and years,
Yeah.
but they don't have a nest egg.
Right.
They don't have any protection.
Right.
So literally, they are forced
They have to work.
to entertain. They have to be out there. And it's the same thing. You make a good point. There are some folks that work after retirement and they do it because they're bored.
Right.
But there are a majority of people that work after retirement because the money is low.
Right.
Housing is so expensive. It's so hard to get affordable housing. And the list just goes on and on as for the reasons that folks still work.
Right. There's no employee discount. There's no senior citizen discount for being retired, honestly. Taxes
Right.
don't get any less. Your
Mhm.
monthly living expenses don't get any lower. The price of
Right.
milk isn't going to go down just because
Right.
like every single thing, every single expense you have will keep increasing while your income is doing this or this. Like, it's completely stopped. You still need to eat. You still need a place to live. You still have to pay electricity. You still have to pay, for a cell phone if you want to talk to your friends and family, right? There's every single expense will keep going up. And if you don't have a plan for that, you're going to be in trouble.
Yeah.
You're going to be in trouble. And making a plan is easier than you think.
Let me tell you something, Gillian K. Mullings. You better get your questions in. Get your questions in because this woman knows what she's talking about. Listen, like I said, that she wrote Retire Like a Boss. She also offers a 20-minute consultation. Come on. 20-minute consultation. And let me tell you something about these consultations that happen. They are to the wire. So you better get your questions and everything together because I'm not mad at them. Listen, time is money. 20 minutes is a long time. Yeah. So when you ask for a consultation, I'm not just saying just with Jillian, whatever, whomever you want to deal with, and you need a consultation. Like I did one with podcasting, and I was ready with my questions.
Yeah.
Because trust me, they have a timer. And it's not personal. It's not personal. They don't have the time to sit there you longer than that. Other than if it's longer than that, now you're going to have to pay. So take advantage of the 20-minute, get an idea of what it is that you're looking for, and then from there, book an appointment.
Right.
You have the support. You have to have some skin in the game. You can't think that somebody's going to just go ahead and just give you all of this information and they have to eat too. And so we have to support. Isn't that right? Isn't that right, Jillian?
Absolutely.
Oh, we have now Deron from Houston, and she's saying so right. It's no joke out here. And then we have Darlene from New Jersey. She's saying great information. We have Craig again and said in the event that you don't have a trust, then you have to enroll in Medicaid spend down. Hence why it's important to have a trust. So
Right.
very true, Craig. You
Right.
are astute. Mm-hmm. Yeah, it's really important. There are a lot of things that one can take advantage of. You just have to know. And like you said, there's such a thing called Google. I am big on research. I mean, I will research. The sun will go down, rise again, and I'm still in it researching.
I'm
That's
the
just
same
me. But
way.
you find out so much information because you
Yeah,
start at one end and then you go to the other, and then next thing you know, it's so much
it
that you
is.
have.
It
So
is.
you have the 20-minute consultation. You have an inflation buster budget and savings workbook. Come on, everyone. Check out Jillian's page. Check out her page on Instagram. And then you have 10 steps to start your business in New York, as we spoke about, your ebook. And also, you can apply now for term insurance. And guess what? Same day approval. Better deal with Jillian. She knows what she's talking about. You know, she Jillian is just so sweet. She's like, okay, Gina. I'm telling you, I'll have the excitement for her. Her IG is at Haven Financial Solutions. Do you have a website?
It's that's the best place right now. I do have a website. It's havenfs.us. Um, Lots of changes are happening, but yes, I do.
Okay, okay. So for those of you who are on Instagram, if you're not on Instagram, I really encourage you to check her page, Haven Financial Solutions, and you will see everything that I spoke about. Her book, Retire Like a Boss, can be purchased on Amazon.
Right.
Amazing book. Anything else that you want to share with us, Jillian?
Yeah, just I want to touch one topic. I don't know how much time we have, but I'll make it quick.
Mm-hmm.
I have a pet peeve,
Okay.
and it's about Social Security. Right? There's a
Mm-hmm.
lot of misleading information saying that, oh, Social Security is going to be bankrupt in 2033.
Okay.
So 10 years from now, right? And
Mm-hmm.
people fall prey to this, and it's usually somebody that's trying to get them to do something else with their money, right?
Right.
Social Security is not going bankrupt. It's funded 100% by W-2 workers' payroll taxes, your FICA taxes, pays for your Medicare, pays for Social Security. As long as there are W-2 workers, there will be money going towards Social Security.
Mm-hmm.
Excess money from FICA taxes goes into what's called a Medicare or Social Security trust fund. That is in danger of being insolvent in 10 years, right?
Wow.
That is not the Medicare that pays for your retirement. So don't let people talk you out of working and saving and planning for retirement. Social Security is going to be there. They will need to
Mm-hmm.
make some adjustments to it to make it last longer, but it's not going
Right.
bankrupt. It's not going bankrupt. It is
A lot of misinformation out there. Mm-hmm.
it's a national pension, a national annuity program. They're constantly revising it and making it better. And the reason I emphasize it is because a lot of people, for many reasons, don't have enough saved. And it's a very critical, it's the first cornerstone of retirement. All of my planning is based on what do you have in that bucket. Then let's see
Mm-hmm.
what else you have over here. And if there's anything else we can do in addition to that. But that's where it starts. And there's a lot of planning around it, and don't take it for granted.
Listen, I have a comment here. Um, Someone is saying everyone can't afford a trust fund. What do you do? It's not a trust fund. It's putting the assets in a trust.
There's so many,
Mm-hmm.
when you say everyone can't afford a trust fund, what do you think a trust fund costs? What are you
Mm-hmm.
basing that on, right?
Right.
So we just mentioned average home in New York, lower New York, where we are,
Mm-hmm.
around 500,000, right? Sometimes much more than that. But let's say it's $500,000. and you
Right.
also have a pension and you have, retirement savings, whatever, how much do you think an attorney is going to charge you to draft a document to shield those assets? It's not going to cost you the value of your house, right? The attorney might cost a couple $100. It might cost $1,000 or $2,000. It's worth it to sit with an attorney and pay that fee to protect your $500,000 of assets.
Right.
Doesn't cost a lot of money.
Right.
It doesn't, so I don't want people to be afraid and to say things like that, because it really discourages people from taking action when they could. And that action is accessible, it's easy, and it's affordable. But this is one of those questions. If you're not sure, just ask. It's okay. It's
I
okay.
agree. And then sometimes not sometimes, but there are attorneys that practice law in different states.
Correct.
That's the other great thing. So you don't have to stay within your state. So,
Well, so you're touching on another point, and I didn't say this before, but I will say it now. I am not a lawyer. I'm not giving legal advice. But there are people with properties in multiple states, right? So if you are setting up a trust, trusts follow basically state guidelines. Some of them, some follow, they're just everywhere, but states, trusts and wills, many times they're dependent on the state that you live in and the attorney that's licensed in that state. So I'm glad you mentioned that, because you might need to do 2 sets of documents depending on where your property is.
Exactly.
But absolutely, if you're talking about $1,000 versus $500,000, pay the $1,000 to the attorney.
Yeah.
You have
And right. And each attorney, they charge different. It's like a scale.
Correct.
You don't know. You have to contact, because someone just wrote in and said an elder attorney told him $1,400. Well, maybe that's his fee, depending upon whatever it is, right, that he has to do. But you may go to someone else, and it's not about trying to find the best deal. You want to find the best attorney that knows what they're doing, to set you up properly. That's what you want. But I know that it's different, because I was privy to a couple of cases, and the cost was different.
It's very different, and it's the value that we're talking about is not the price you're paying for the service, right?
Yeah.
The value that we're talking about is the value of having the ability to qualify for that care. It's over $280,000 a year if you need round-the-clock care from a home health aide.
Right.
Provided, if you're going to pay it out of your pocket, that's how much it would cost you on average in New York State. If you have a home that's worth something, even if they force you to spend it out, that's going to cost you, that's going to cover 2 years of care. You might be in care for 5 years.
Yeah.
You might be in care for longer, right? So we're not talking about, the attorney wants too much money. What are you protecting? What is the value of what you're protecting? And what is the value of the benefit that you're hoping to get out of this?
That's right.
Attorneys will make deals with you. You can do a payment plan, but the important thing is not to leave negative generational wealth. Not to leave, be that Papa had a Rolling Stone and all he left us was a loan, LOAN, right? We want to break that cycle.
That's right. And get insurance on yourself. Get insurance on yourself. I mean, why are people afraid? I mean, I had the representative come to my home, came to my home, took the blood, and, do it.
Do it, guys.
You could be feeling great for the last year, last 3 years, last 5 years, but you don't know. We're not in control. We don't know when
came through a pandemic. We just came through nobody saw it coming.
You must get that insurance on yourself. That's very important. Very, very, very important. If anyone on this live does not have insurance, I implore you, Jillian implores you to please look into it. You can even go on her IG page, which is at Haven Financial Solutions, and you would click on the link. And the last one is the term insurance. Listen, you need to do it. You need to do it. You need to do it. Jillian. You know, I'm so happy you came on.
I'm
This
happy
is a
that
long
I came
time
on.
coming. And we were like, oh, we have to get this done. We have to get this done. And here you are here. You're about to embark on something else. I called you and you were just.
Timing was so perfect.
The timing, right? We talked about that and the timing.
Yes.
But I thank you so very much. You know, you shared your wellness journey with the audience. I appreciate you. They appreciate you. I know there was a lot of takeaways because there were some nice comments that were made. And I'm sure that folks are going to watch it again because sometimes you hear it, but then you need to hear it again.
Right.
And then, of course, you showed us some mad love. Come on, let's do just a little stuff. What a sport. You are such a dear. Thank you so very much for being on. We appreciate you and I appreciate you. Okay.
Thank you for having me on. It's been a great pleasure talking to everyone. And if you have any questions, shoot it to Gina and she'll get it to me or DM me.
Definitely. Without a doubt. You continue to take care of yourself. Okay. That's Gillian K. Mullings, founder of Haven Financial Solutions. Take care.
Have a good day. Bye.
Thank you all so very much. This was really a great show. Folks were quite interactive, and I appreciate all of the comments, the questions. Simply amazing. You know, I can't go out without thanking my sponsor, PPI Security, that specializes in city, state, and government contracts. You know, next week I'll be back again with another great guest. Isn't that right? I know all of you are saying, yes, Gina, that is right. You know, we're going out on this mad love again. Spread that mad love. Share this information with someone. You know what I mean? You know, as they say, tell a friend to tell a friend. Mad love. Show love, 'cause I get mad love. No!